What's good, YouTube? Welcome back to my channel. Let's get right into it. Today we're going to be talking about stamps. So the stock ticker is STMP. Earnings call is on May 7th, so be on the lookout for that. Let's check out the daily chart. So if you look at February of last year, the stock took a huge drop. I'll get into that a little bit later. I'm taking a look at the weekly chart. You can kind of see it's forming a cup with handle base. If you look at the 50-day moving average, the stock price is above that, which is a good sign for all of you who are into technical analysis. So kind of getting back to what I was talking about, why the stock took a big drop, is because of the exclusive deal the company had with USPS. It actually severed that exclusive deal, and like the article says, you can blame it on Amazon. And if you look at a year later, right? So a year later, February, going back to the weekly chart, you can see that it actually rocketed higher, and that is actually because of e-commerce and Amazon. So we can see that psychology just plays a factor, human emotions plays a factor, but the company knew what it was doing. The game has changed. USPS isn't once what it was. Amazon is taking over, as we all know. So, I mean, it happens, and good thing is actually the stock is where it should be, and it's moving higher. So more company news is also right after that big drop on March 11th, the company said that is going to start repurchasing shares, which is actually perfect timing because the stock took a huge drop. So all those who actually bought during this time or who are shareholders did benefit from this. Some more company news. So the Asian countries are actually facing a possible wave of coronavirus, the second wave of it. So this is actually very huge as far as just shipping and stamps go, because, well, that's what a lot of us are doing now. That's how we're getting most of our products now, is through online, right? And if you look at Amazon, it actually said that on the 13th it's going to start expanding non-essential items. So for a while they had on back order everything that wasn't pretty much PPE. If it didn't pertain to the coronavirus, it was held in back order and it was going to be shipped after everything else pretty much got shipped, right? But on the 13th, Amazon said, hey, we're going to open up non-essential items, and also is going to continue to add staff, which is going to go ahead and get the processing faster, so more shipments are going to be out, which is going to go ahead and benefit stamps, right? So here's Stamps business model. It has its target customer segments: e-commerce, individual, enterprise. You guys can go ahead and check that out. I left that there for you guys so you guys can go ahead and understand the business model. And just some companies that Stamps partners with. So for shopping carts, you guys can go ahead and once again take a look at this. So you can see Shopify, which is huge. Marketplace as well. You have your Amazon, eBay, Etsy, PayPal, Rakuten, Sears, Yahoo. Multi-carriers, which is very, very big as well. But now let's get to the fun stuff, which is the financial statements. So just taking a look at the 3-year, the annualized growth, you can see that revenue has grown at 16% over the last 3 years. Operating income has been negative, which is negative 8.02%. Net income the same, and diluted EPS the same. Financial health, you look at the quick ratio, the current ratio, which is good. We have 1.5, and also the interest coverage, which is good as well. Return on assets 6.75, return on equity 9.26. It's not the best, but hey, it's a return on equity. And we have return on invested capital and net margin of 10.36%. So I'm actually going to go break it down a little bit more into the income statement. So you can see revenues. They have in 2019 it dropped, like I said, of course, because of the deal with USPS. And the thing to note about that is it actually earned commissions from USPS on everything it sold. So with the restructuring of that, they weren't making as much commissions, but long term, I think that what they're doing with the company is definitely going to work for them. So looking at the operating income, you can see once again, yeah, it did drop, and the reason for that was because of sales. So their sales team and the marketing team is starting to go out and trying to attract more customers. and that once it reduced net income, you can see diluted EPS. Long term, I think it's going to be. I think it's good what they're doing. Balance. So taking a look at the balance sheet, you can see. Look at cash. The first thing I want you to notice, look at cash and cash equivalents and short-term investments. $156 million. All right, and if you look at total debt, it's pretty much $69 million. So just cash and short-term cash and cash equivalents and short-term, it pretty much covers debt, which is something I always look for, something I look to see if a company can do that, then I check a box, and that's a good thing for me. Total assets is 902. Total liabilities 236. So the company is in a great financial position as far as withholding what we're going through right now, as far as the coronavirus, and just being able to be solvent and healthy. So moving on to cash flow statement, right? So the cash flow statement, so operating activities. So you had your depreciation was roughly around 28 million. Stock-based compensation was roughly around 43 million, and changes in working capital was about 8.2 million. Right, so those are just three main components. It's not everything, so if you want to go ahead and take a look into that, you definitely can. CapEx. So if you don't know what CapEx is, it's just what it takes to maintain the company, right? So how much do I have to reinvest into the company just to keep it going? And that amounted to $2.25 million. Financing activities. Moving further down, so they had the purchase of common stock, which I talked about earlier in the video. Amounted to about $65 million. So they purchased $65 million worth of stock back into the company, which is great for shareholders. And they also repaid debt, which was of the amount of $33.6 million. So for how to calculate free cash flow, you just take your operating activities and you go ahead and minus your capital expenditures, and that amounts to $135 million. So that's just it. That's stamps. Definitely take a look into them. And like always, thank you for watching. Like, comment, and subscribe. See you guys on my next video.